All right, let's talk about money. Specifically, how you can keep more of the money you make from your investments and pay less to the tax man. Today, we're going to break down a really smart and totally legal strategy called tax harvesting. It can seriously boost your wealth over the long run. Okay, let's get right into it.
You know that feeling, right? You see your mutual funds are doing great, the profits are piling up on paper, but you know, deep down, that when you go to sell, a slice of that gain isn't really yours. Nope, it's headed straight to the government. It's just a part of investing, but what if you could legally shrink that slice?
So, if we're going to tackle this tax problem, we've got to know the rules of the game first. And the biggest rule we need to understand is something called capital gains tax. Now don't worry, it's not as scary as it sounds. In fact, understanding this one thing is the key to the entire strategy we're about to unlock.
Look, when it comes to your equity mutual funds, there are basically two kinds of gains. If you sell an investment in under 12 months, that's a short-term gain, and bam, you get hit with a pretty hefty 20% tax. But if you just hold on for more than a year, it magically becomes a long-term gain, and that tax rate drops all the way down to 12.5%. The lesson here is super simple. Time is literally money.
And hey, just a quick heads up. We're zeroing in on equity funds today, but you should know that this long-term definition isn't the same for everything. For things like real estate, gold, or even debt funds, you have to hold them for over 2 years to get that long-term status. Just something to keep in the back of your mind for your overall portfolio.
Okay, enough about the problem, right? Let's talk about the solution, the opportunity. See, tucked away in our tax laws is this amazing little feature that most investors either don't know about or just forget to use. It's an annual exemption, and it's what makes this whole strategy possible.
And here it is. This is the magic number. 1,25,000 rupees. Every single financial year, you are allowed to make this much in long-term capital gains completely tax-free. I'll say it again. Zero tax on the first 1.25 lakhs of profit you make.
The best way to think about this is like a coupon. The government hands you this tax-free coupon every year. But here's the catch. If you don't use it by the end of the financial year, it's gone. Poof! It doesn't roll over to the next year. It is a classic use it or lose it deal.
So, the big question is, how do you make absolutely sure you use that coupon every single year? Well, that's where this brilliant strategy comes in. It's called tax harvesting. Let me show you exactly how it works, step by step.
So what on earth is tax harvesting? You know, at its heart, it's incredibly simple. It's just the act of selling a part of your investments to officially book those capital gains up to your tax-free limit. You lock in the profit, use your exemption, and then, and this is the most important part, you immediately buy back into the market. Here's the playbook, broken down into 3 easy moves. First, you calculate. Figure out how much unrealized profit you're sitting on in funds you've held for over a year. Second, you sell. Just enough to cash in on gains up to that magic 125,000 rupees limit. And third, you immediately repurchase. What this does is brilliant. It resets your buying price to a new, higher level. This lowers your taxable gains way down the road, all while you just pocketed today's profit completely tax-free. Now, I know what you might be thinking. This sounds like a neat little trick, but does it really make a big difference? Oh yeah. Doing this one simple thing year after year has a massive, compounding effect on your wealth. Let's look at the actual numbers, because this is where it gets really exciting. Just look at this. This is the power of compounding in action. If you're in the 20% tax bracket, you save 25,000 rupees in taxes in year 1. That's great. But you do this every year for a decade, and you reinvest those savings, and the total benefit explodes to over 5 lakh rupees. That's not just a number on a screen. That is real money that could be a down payment on a house or a much bigger retirement fund. And this table just lays it all out for you. It really doesn't matter what tax bracket you're in. The benefits are huge across the board. I mean, look at that top bracket. A total benefit of over 8 lakh rupees in a decade. This isn't some minor adjustment. This is a significant wealth-building tool that's just sitting there, hiding in plain sight, waiting for you to use it. And that's really what this is all about. Tax harvesting is the perfect example of how just knowing the rules can lead to some seriously powerful results for your money. It kind of makes you wonder, doesn't it? What other simple, clever optimizations are just waiting to be found in your own finances? Thanks for tuning in.